What's up traders, it's Nick here and welcome to another breakdown. As usual, I will be keeping it as educational as possible and also practical. So without further ado, let the intro roll and I will see you on the charts. The pair that I want to speak about in today's video is Euro JPY. Now, why do I want to speak about Euro JPY? Because this pair is very near to providing to us a good trading opportunity. So I want to give you a full breakdown of the situation that we have to show you where we can be looking for the next potential opportunity. And as usual, I will be keeping this analysis as educational as possible. So first, we will be covering the technical aspect of this market. We will then go and see what we have from an order flow perspective by checking the commitment of traders. So what hedge funds are doing both on the Euro and on the JPY. And by the end of the video, by using the combination of our technical analysis and our order flow analysis, we will be able to understand where we have the highest probability setup on this pair. Now, starting here from the monthly time frame, what do we have? Now, here on the monthly, we have a market which has just provided a quite nice impulse to the upside, followed by this correction, and also the creation of this continuation to the upside. Now, generally speaking, after an impulse, correction, and impulse, what you expect is for the market to provide a correction. Specifically, you would like to see the market provide a correction all the way down to the previous resistance, now turn support here from a monthly perspective. So everything here is quite clear. We do expect the market to provide to us a nice correction back to this area before a potential continuation to the upside. What we can also notice here on the monthly time frame is that the market has provided an impulse, as we just said. And after an impulse, if we want to measure the potential correction, we have to take our Fibonacci on the impulse leg itself. So in this case, from this low to this high. And if we do that, what we can see is that we have a 0.382 Fibonacci retracement, which is lining up perfectly with the previous resistance turn support, creating a confluence of support at this area that we do expect the market to go and test before a potential continuation to the upside. So here we have quite strong liquidity and demand that the market should be attracted towards. Going down on the weekly time frame, what do we have? Now here on the weekly, we can see how the market has actually just provided a quite strong impulse correction and it is currently trying to create the continuation to the upside. Now also here, as we have already said on the monthly, if we want to measure the retracement, we have to take our Fibonacci from the low to the high of the impulse. And if we do that, what we can see is that the market is currently testing the Fibonacci levels one by one. First, the market tested the 50%, and now we are testing and rejecting the 0.32 of the Fibonacci taken on this weekly impulse, from which there is definitely the possibility to see the market create more continuation to the upside. Going down on the daily time frame, what do we have? Now here on the daily time frame, we can see how the market has currently been creating a minor impulse correction, impulse pattern to the upside. Now, I had spoken about the Euro JPY quite a few times in the past. I spoke about Euro JPY after the creation of this overextended W formation. When the market was at this area, I made a full breakdown explaining all the reasons for which, from this zone, we expected the market to provide this move to the downside. And in fact, that is exactly what the market did. Then, from here, I made another breakdown explaining all the reasons for which we expected the market to provide this continuation to the upside. And again, that is exactly what the market did. Then from here, I made another breakdown explaining all the reasons for which we expected the market to provide this move to the downside. And once again, that is exactly what the market did. Then from here, I made another breakdown explaining all the reasons for which we expected the market to provide this continuation to the upside. And once again, that is exactly what the market did. Then from here, I made another breakdown explaining all the reasons for which we expected first the market to create a move to the downside. And then from here, I made another breakdown explaining why we wanted to see the market provide a continuation to the upside. And again, that is exactly what the market did. And by the way, I will link in description all this previous analysis. so you can go and check it out for further reference and more free education. If you have any questions or requests for the next videos, make sure that you leave them down in the comment section below. Also, make sure that you smash that like button and subscribe. Now, lately, we spoke about Euro JPY after this impulse and correction. Generally speaking, after an impulse and correction, you expect the market to provide the continuation to the downside. However, as usual, the monthly, weekly, and daily timeframes combined with the COT data, which we will now speak about, are the best timeframes for the directional aspect of the market. But then you always have to go down on the 4-hour timeframe to look for confirmations. And inside of here, on the 4 hours, the market remained bullish all the time. So obviously with students, we didn't look for any kind of shorting opportunities because everything remained bullish all the time. And now we can see how the market has just broken above this resistance, creating this W formation. And generally speaking, after the creation of a W formation, we can be looking for a nice short for a completion back at the neckline. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is what hedge funds are currently doing in the market, what we can see is that with the last reports, we went from having 140.2k net positions all the way down to having 93k net positions, meaning that from an institutional perspective, hedge funds are shifting their positioning to the negative side. So that is why the euro is getting quite weak. And if we go and see what we have on the JPY, what we can see is that it has been getting even weaker than the euro. We can see how we went from having 50k net positions, so more longs than shorts from an institutional perspective, all the way down to having the complete opposite, so way more shorts than longs from an institutional perspective with a negative net positioning and 81k shorts and 27k longs. That is why, even though the euro is quite weak, Euro JPY has been making the move to the upside because the JPY has been even weaker than the euro. Now, obviously, at some point, we do expect a retracement in the weakness of the JPY, meaning that Euro JPY could easily complete this W formation at the neckline, which is exactly what we will be waiting for with students. So how we will be approaching this potential shorting opportunity with students? As usual, as I just said, we will be reactive and not predictive. Monthly, weekly, and daily, and the COT data are the best timeframes for the direction. When it comes to confirmations and entries, the best timeframes are the 4-hour and the other intraday timeframes. So with students, what we will be doing is monitoring price action from a 4-hour perspective and lower during this move to the upside. And we will be waiting for the market to shift from a 4-hour and lower bullish market as we will have to a 4-hour and lower bearish market. And as soon as the market will shift from a bullish to a bearish market, at that point, we will be adding Euro JPY to our watch list with students. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities at that point for the move to the downside and for the market to complete the pattern at the previous resistance, now turn support here on the daily time frame. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education analysis and updates for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you get all the rules of my rule-based strategies, and then you trade them live with me. Each and every day, I give you a new daily market breakdown showing you how to apply the strategies with the entries, stops, and take profits, as well as answering all your questions every single day, including the weekends. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in it.